course, the public sector audit carried out by the Auditor General, and that type of arrangement. But I think essentially you are talking about the ministerial audit, which is provided for under Article 23 of the 2016 Petroleum Agreement.
And what kind of audit will that be?
Well, it will be what the agreement says it will be. Let me give you a quick rundown. A contractor shall be responsible for maintaining accounting records relating to petroleum audits operations under this agreement in accordance with accounting procedures set out in Annex C hereto. Hereto means in relation to the agreement. The minister shall have the right to audit the accounting records of the contractor in respect of petroleum operations in accordance with accounting procedure. Nothing in this article shall be construed as limiting the right of government or any officer of government pursuant to any statutory power to audit or cause to be audited the books of the contractor. This comes back to the question you're raising. That same Article 23(3) means that this audit that is being carried out, this ministerial audit that's being carried out, doesn't prejudice the right of the government or any officer of government, which would include the Auditor General, for example, or the Ghana Revenue Authority, for carrying out their own audits. We must not confuse, as I see being done, we must not confuse the audit under Article 23 of the Petroleum Agreement with the audit, the tax audit being done by the Ghana Revenue Authority or any other audit that might be done of the books outside of the agreement.
Okay, and for viewers on radio, our listeners on radio, who and those on YouTube and Facebook who might not know what an audit is, there, as Mr. Ram was just mentioning, it depends on what audit is undertaken. And in the case of the oil and gas sector we're in, the agreement we signed with Exxon Mobil, it is what he said is a ministerial audit. Now, in accounting, and Mr. Ramble can explain this even more to us, there are what we call internal auditors, and they're the ones who go through a transaction in very detail, the company's books. Mr. Ram, in your opinion, was the ministerial audit something like an internal audit function, or it is different?
It's very different. An internal audit is not an independent audit. It's an internal auditor is employed by the company in his capacity as internal auditor, and you usually set up the internal audit as a department, like you would set up any kind of department, because management needs help of various service elements of the business. So, for example, management needs to know, the directors need to know, well, you know, we've budgeted so much money to be spent in a particular line item. How is that money being spent? Are we getting value for money? And with an internal auditor or with an internal audit, the management and the directors set the terms and conditions and the scope of the audit. A ministerial audit is very different. An external audit, a statutory audit, is very different. A statutory audit is carried out essentially on behalf of the shareholders. At the annual general meeting, the shareholders would elect an auditor or appoint, they vote to elect an auditor. And that auditor carries out the audit in accordance with the laws, the Companies Act, and with any bylaws or articles of the company.
And for viewers again,
that person is independent. Sorry.
Yeah, sorry, Mr. Ram. And for those of you on radio, and I want to make this very clear to our listeners on YouTube and on Facebook as well, is that this audit that was undertaken is none of the above we talk about. It's not an audit that the company would have set up, as Mr. Ram rightly mentioned. The shareholders would have voted to, the directors would recommend a company to audit the books of the company, and the shareholders will ratify that decision. In the case of internal audit, that will be an internal transaction or internal department, as Mr. Ram rightly said, that is set up by the company to help the manager, the CEO, and his officials to ensure that the system is working the way it should. And they will report any anomaly to the managers, and then they will correct any anomaly, if any, and then the internal auditor will follow that up. The audit that we did, IHS Markle did, was none of the above. It was a company selected by the government of Guyana. Is that correct, Mr. Ram?
That is correct.
And who, in an external auditor, like an independent auditor for a company, the company will pay the costs to that auditor, whatever the cost is. In internal audit, of course, that's a line item function, and the company will pay that as well. Who pays for this audit that was executed by HSS Markle?
Well, this is one of the unfortunate matters in relation to this 2016 agreement. The minister is the one who has, meaning the government, who has to pay for the cost of the audit. It is not the company. It is not a recoverable cost in the accounts. In fact, this is how remember we said when I quoted Article 23, and I said in accordance with the procedures set out in Annex C. This is what Annex C 1.5 states: audit and inspection rights. So it's not just audit, inspection rights. The minister shall have the right to audit upon 90 days written notice. One of the good things about audit is the surprise element. You should be able to walk in anytime, but maybe because of good order, you give the all companies 90 days. Hopefully they use that constructively. At his sole cost and expense. It is the government that has to pay for this audit. It does not come out of the oil funds, does not come out of the natural resource fund. It comes out of the government's pockets, the consolidated fund.
Excellent question, Mr. Ram. And for viewers out there, again, I just want you to be very clear that this audit, as Mr. Ram correctly mentioned, it was an auditor selected by the government, and the fees for that audit is not, and I want to repeat, it is not cost recoverable. Like everything Exxon does, almost everything, they can recover those costs. In this case, we are getting 2% royalty, 12.5% in profits. So we are getting, for every 100 barrels of oil produced, we are getting 14.5 barrels, if you understand it that way. Out of that, Mr. Ram, well, he said it a little different, but Mr. Ram is absolutely correct. It is not paid out of that 14.5. It is paid out of our consolidated fund. But of course, the government can draw down on that for the consolidated fund. So it's kind of a A equal B and B equals C, then A must be equal to C. And that is the kind of fiasco we have. Mr. Ram, do you know what was the cost of that audit that was undertaken by HSS Markle that the people of Guyana had to pay?
I don't think that information has been disclosed.
That was not made public. That's another thing that we need to, you see, the thing about audit fees, of course, when you have an external auditor, the board of directors will approve the fee and the shareholders will ratify it as well. So at least the public, at least shareholders know what is going on there. In this case, we have a government who has selected a company and we don't know what the fee is. I know they're doing one now, Mr. Ram, as you know, and I think the fee was almost like 700,000 US. Is that correct?
I believe that figure was bandied about, yes.
Yeah, okay. So let's get to the audit itself now. Ladies and gentlemen, we are on live on radio 99.1, 99.5 Kaitio radio on the FM. We're also streaming live on YouTube and Facebook. We want to thank you for joining us. And tonight we are discussing the Exxon $215 million audit debacle. I want to encourage you, if you like our program, give us a thumbs up. So, and the way the algorithm work on YouTube and Facebook, because you know, the more like you have, if you don't like the program, give us a thumbs down too. But leave us a message. Let us know what you want to do, what you want to discuss. Send us any question and we'll be able, hopefully we can answer your question. Mr. Ram, as I mentioned in the program at the beginning, you are you're a chartered accountant, qualified in the United Kingdom for over 40 years. You've been an auditor for more than 40 years. If you were given the task and you were on the government side in charge of implementing the audit of the Stabroek Block Production Sharing Agreement, how would you go ahead to get the job carried out best and in a timely manner to the benefit of the Guyanese people?
Well, it depends, first of all, on the scope of the audit. But if, and I don't like how you personalize it, I think how should a professional accountant approach such an audit? Does that audit conform to what is required under the agreement? I say that, Mr. Sogrim, because I've heard it talk about these audits being a cost recovery audit. No, the audit is of the petroleum operations. It is true that when IHS was asked to do an audit and the period which it covered, only costs had been incurred. There's exploration activities, but no petroleum operations in place. So you would want to make sure that a professional auditor would want to make sure that his scope is not deliberately or inadvertently restricted by whoever commissions him or her to do the audit. He or she would have to be very familiar with the agreement, the 2016 petroleum agreement in this case, would have to be very conversant with the Petroleum Exploration and Production Act, would have to be very conversant with the Petroleum Exploration and Production regulations, because that is the legislative framework within which he or she, I keep saying he, I'm sorry. That's the legislative framework within which she has to operate. The auditor would set out her scope, would do an audit plan. I have in my files a document which I prepared some time ago, audit plan petroleum operations under the petroleum agreement of June 2016. That's how it would be done. Now, you could be the best auditor, and Charles, I've been qualified 50 years now, not 40 years. It's been so damn long. Qualified as an accountant. I was qualified as a chartered secretary in 1969. That's 31 and 50, almost 55 years, something like that. I've been around. But if one of the things about an auditor, you never accept an appointment unless you are convinced that you have the capacity and the skill, including the resources, to carry out the audit in a timely manner and in a professional manner. Auditors work based on certain standards, and they would normally have to set out how they're going to approach the audit. But essentially, it's a plan like everything else. The auditor has to have the capacity, will have to have a proper plan, and will work towards that plan.
And that brings me to the next question, Mr. Ram. You think, is it realistic for Guyana to train sufficient auditors to monitor effectively complex production sharing agreement like what we have now, and any new PSA? And if not, what are the alternatives?
It's a very good question. I think many auditors might think, well, if you can audit a departmental store, you can audit a bank, or you can audit an insurance company, you have to have some skills or access to specialized skills, including tools. For example, the tools to do your audit. If we want to measure, to check whether the revenue is correctly accounted for, we have to ask ourselves what kind of systems the entity had in place for recording production. How is that production then transported and delivered? I think the agreement has a particular article about the point of delivery, I believe it's called. You have to know all of those. You have to be familiar with that. You have to understand the intricacies to see whether there's enough, there are any risks of leakages that you haven't, or you cannot easily determine. But so the auditor should not take an engagement unless the auditor is very confident of her ability to do the job. Audit is a team. You can buy in resources. So, for example, you may have an audit firm, and the firm decides, look, I can't do all of this work myself. I will partner with a specialized petroleum audit firm or petroleum auditor. And so that you make sure you have the full range of skills to deliver on a proper audit, at the end of which you have the audit report, and there's a process for dealing with audit report, which you probably will want to come to in this question. It looks more like a question and answer session this afternoon.
Oh, yeah. No, I know, Mr. Ram, and I want our listeners on radio to understand in simple terms, and you're doing it in very simple terms. And for those watching on YouTube and Facebook, I will presume that most of our listeners and viewers are not accountants, and they don't know what the crap you're talking about in audit. And I think you're explaining it very clear to them. And I want our viewers and our listeners to know that Mr. Ram not only is a chartered accountant and attorney at law, but he also did a master's degree in the petroleum industry, and he got a distinction. So he knows what he's talking about. You know, when he prepare a report or a schedule of what the audit should be, he knows what he's talking about. Doing oil and gas audit is not the same thing as auditing Guyana stores or auditing, Fogarty's, or one of our companies locally, because those are really merchandising company. They buy goods and they sell goods. That's a different kind of audit. To audit what we did, and this audit we're talking about today, the $214 million debacle, was, as Mr. Ram rightly mentioned, our pre-production cost from 1999 to 2015, I believe, Mr. Ram. And we are now reviewing that to see what the right number should be. I know, Mr. Ram, you had mentioned in your letter, so eloquently written, that when Exxon, and I want to go off a little off on the audit here now, when Exxon, Shell left the exploration part because they think it was not paying dividend or whatever the reason. But then Exxon invited CNOOC and Hess to be part of that team. And you had mentioned that in your report that more likely than not, these companies would have had to pay Exxon some fees, whatever we call that, capital injection, whatever, to buy in that 55% of the shares that they sold to these companies out of the Stabroek block. Now that they're giving us a bill for whatever the number is, 460 million, I believe, or 500, whatever the number is, you are saying that some of those costs that was incurred was already given back to Exxon. Is that the right classification I'm saying, or do you want to explain it further?
Well, there are a couple of issues there, Mr. Sogrim. First of all, because the agreement was signed in June 2016, production was sometime after. You had a whole set of costs to contend with. First of all, at June 2016, the only figures that might have been verifiable at that time was the figures up to December 31, 2015. So you have that element, December 31, 2015. That is part of the pre-contract costs. But because the contract was not signed until June, let me see.
2016, yeah.
June, I want to give you the exact date. 27th of June 2016, you had pre-contract costs, which was made up of the cost of the December 31, 2015, and from January 1, 2016 to the 26th of June 2016. That would be pre-contract costs. That then goes into pre-production costs. We know that there was no production until sometime late 2019. It was a bit of a trial run. So you had pre-2015, pre-contract, and pre-production. Those are the elements, of course, you had to deal with. Then, after the production started, you had production operations in which you have recoverable costs, the costs that are set out So the costs that are charged against the revenue before you arrive at what you say is the 12.5% for the government. We should be fair, we should be honest, that 25% is a minimum. Because if recoverable costs in 1 year is only 60%, then profit divisible to the parties, and they're, although you got the SO, Hess, and CNOC, they are called contractors. They are free contractors. The other party to the agreement is the Minister of Natural Resources as a representative of the government. There are two parties. That revenue minus 60%, which leaves 40%, is divided between the two sides, and the government will actually get 20% and not 12.5%. Now, because of the way the contract is drafted, and because we neither have ring fencing in the agreement nor enforce ring fencing by way of conditions, then it's going to take us a hell of a long time. I don't think we will see more than 12.5% until the very late years of this decade. Because let me tell you why I said about ring fencing. When an oil company, one of the contractors, or when the contractors decide we have found oil, it's in commercial quantity, and we've applied for a production license, the minister can set conditions in the license. One of the conditions he can say is, look, you can't take money from this license to go looking speculatively for oil in another part of the block. I know the government's position is probably, well, we're gonna hold them if they spend money in another block. For one thing, you're accelerating the exploration, but they will have spent money, so they're gonna stay. The only problem is the money that they're spending, half of it belongs to you. And there is a time cost of money. The money we will get in 2030 is the dollar we get in 2030, the US dollar, is not going to be worth the same that the US dollar is worth in 2023. So all of these things, the economics of the petroleum sector, it's a whole new branch for us in Guyana. But we have President Ali said he got a bad hand. Yes, but when you get lemon, what do? You try to make lemonade, you try to make something good of it. You recover what you can by saying, wherever if there are loopholes in the contract, Exxon is going to exploit those loopholes. If there are loopholes in the contract that the government can exploit, why not? The government has a duty to protect the interests, to manage the contract in the interests of the people of Guyana. The petroleum acts is the patrimony of the oil belongs to the state. And the government is responsible for the management of the state and to see that things are done not only for existing generations, but for future generations as well.
Ladies and gentlemen, you're listening to Kaito Radio 99.1, 99.5 FM, and you're also streaming live on Facebook and YouTube. Tonight, we are discussing the Exxon $214 million audit debacle. And to help us in that discussion is Mr. Christopher Ram, Chartered Accountant and Attorney at Law, and also one of the very few Guyanese who have a master's degree in the oil and gas sector with a distinction.
We haven't touched the 2014 yet, you know. I notice.
I know. I'm coming to that now. I'm coming to that now, Mr. Ram.
Okay.
So this audit that was revealed to us, that the auditor said that there is $214 million that was not costs that should be charged as you rightly put it, whether it's exploration costs or pre-contract costs or whatever cost it is. However, if we were to, first question, Mr. Ram, if Exxon were to accept, and we don't know yet because we get into that in a minute, if they were to accept that, yes, $214 million was not proper cost that should be part of the agreement, Guyana will get half of that. Is that correct?
That's correct.
So we'll get $107 million. What will $107 million do to Guyana?
Well, with our exchange rate, it will do a lot.
We can pay some pension, some nice bonus, or some increased pension, a one-time bonus, of course.
Yes, you're talking a lot of money there. You're talking a lot of money.
Okay. Tell us what you think. There is the ministry. We have recently heard that there is a gentleman called Mr. Gosai who works in the office of the minister, and he, Mr. Ram, his title is Senior Petroleum Coordinator.
Mm-hmm.
As we know, a coordinator is one who schedules meetings, not make decisions. Is that a right terminology? Is that a right definition of a coordinator?
Well, you know the saying, if it walks like a duck and it quacks like a duck, it's a duck. So whether he's called coordinator, one does not know what the scope of his responsibility is. But I don't think that is particularly relevant at this stage.
Okay.
Because if one looks, you know, things have gone wrong so many times. First of all, the agreement says you have 2 years after the end of the year to do an audit. We should have done audits every year. Every year. 2 years, no more than 2 years after. So when we took 1999 to 2019 to 2017, we were way, way, way behind time. Be that as it may, it is the minister, as I read 1.5 of the agreement, Annex C, the minister shall have the right to audit. Now, of course, the minister doesn't do the audit himself. He contracts out, as he did in the case of IHS Market. He contracts out that function. Now, what does the agreement say? By the way, the audit includes an examination and a verification of everything, assets, liabilities, books and records, physical plant, everything. The scope of the audit is not restricted. Now, what the agreement provides at the conclusion of each audit, and as you can see again here, Charles, we've dealt with this thing a little bit too casually. I believe this report was out a couple of years ago. This is what it says. At the conclusion of each audit, the audit report and recommendations were revised March 21. So the previous report came out earlier. This revision, March 21. It says, at the conclusion of each audit, the party shall endeavor to settle outstanding matters, and a written report will be issued to the contractor within 60 days of the conclusion of such audit. The report shall include all claims arising from such audit. What this is saying, and I'm a layman as much as anybody else, is that, okay, even if we say it is delayed report 2021, within 60 days, the party should have tried to settle, shall endeavor to settle any outstanding matters arising out of the audit. So we took an inordinately long time. The contractor then has 60 days to reply to the report. He has 60 days to reply to the report in writing. What we seem to be getting is that Exxon and Alistair Routledge and whoever else were quietly and secretly violating that provision of the agreement by going there and say, look, here are fine 2 more invoices, here are fine a schedule, take this from Minna and reduce that 214 million. That is the level of unprofessionalism that crept in to the post-audit conclusions and procedures. Now, so we say the contractor shall reply to the report as soon as possible and no later than 60 days. You're an accountant yourself. What happens in the course of an audit? The auditor would tell the client, look, we have some difficulties with these things. So please make sure we audit going to finish soon. Please make sure you get it. We would prefer not to include it in the audit. Exxon knew all along that IHS Markit did not have all the information they needed. Now, did Exxon reply in 60 days? From what we have heard from the Minister of Petroleum, and incidentally, it is only the minister, not no petroleum coordinator. You know the story about the bus, right? Mr. Zogram, you know the story about the bus?
Go and tell us.
throw somebody under the bus.
Yeah, definitely.
Now, so the contractor shall reply to the report in writing as soon, and in any case, not later than 6 following receipt of the report, indicating acceptance or rejection of the audit team, and in the case of a rejection, showing explanations thereof. Okay, I don't agree with you. IHS said 214 million because of this, that, and that. I don't agree with you. Here is my rebuttal. Now, should the minister, note the word minister, consider that the report or reply requires further investigation on any item therein, the minister shall have the right to conduct further investigation in relation to such matters within 60 days of the contractor's reply. A lot of 60 days here, you notice. If within 60 days of the minister's further investigation, the parties are unable to agree to the disposition of the minister's audit claim, by the way, you notice, is being called the minister's audit, not no GHR, not no GRA audit. And don't be misled and fooled by anyone saying about GRA audit. This is the minister's audit. The claim shall be submitted to the sole expert in accordance with Article 26 of the agreement. Those are the procedures for dealing with an audit from start to finish.
Ladies and gentlemen, you're listening to Mr. Christopher Ram, Chartered Accountant, Attorney at Law, and a master's degree in oil and gas.
Please, you don't have to say all of that, man. Come on.
No, that is important, Mr. Ram, because you are qualified in what you're saying, and those people in Guyana who think that they're qualified, they should listen to you. You're competent in your field. As you said, I thought you were auditor 40 years. You're an auditor over 50 years. The amount of experience you have accumulated over those years means something. So the people of Guyana, please listen. Listen to Mr. Ram. Mr. Ram, but in the audit that was done by IHS Markle, did they get all the documentation that they require for the audit in your view? How did they come up with this 214? Was it invoices or expense sheet given to them, whatever it is, and they decide that this was not part of the cost that should be recoverable?
Very good question. Now, a lot of it had to do with documentation, but let me read from the report, Mr. Sugrim. And this answers the people who said they got every single year audit report. That's a blatant misrepresentation. This is what Exxon said to IHS. Costs for audit contract blocks within Guyana where EEPGL has an interest are not part of the scope of the audit. That's point one. Well, that's all right, because EEPGL had some other interest. But listen to this, please, sir. EEPGL has purged data prior to 2014 from its systems in line with its data retention policy, and data visibility during the period is limited. This is from the report quoting SO Exploration and Guyana Production Limited, that they did not even have financial statements for some of the years, despite what people are saying, that they have seen this and they've seen that. They're lying. All I can say is they're lying. So all the records were not there. But that's in relation to prior to 2004, when a lot was happening. We know there was the question of the force majeure at the Suriname side of the Stabroek block. So I don't want to suggest that millions and millions of dollars went missing in the audit. But it's not true to say that. That's an important point. I want to say as well, we're talking about whether the figures for 2015 had any padding. This is what the report said. EEPGL have indicated that adjustments to this amount is possible for items erroneously included in the cost bank. They themselves are admitting to the auditors that they incorrectly included as costs, as pre-contract costs, items that ought not to have been there.
Ladies and gentlemen, you're listening to Mr. Ram. We're talking about this 214 million audit fiasco that the government is now trying to regularize, and hopefully some decision will be taken shortly. And what we're discussing, ladies and gentlemen, is that, as Mr. Ram said, Exxon has admitted that some of the records have been purged. But Mr. Ram, you're an auditor. And you're accountant first. For any entry to be recorded in a company books, shouldn't there be authentic source document before those entries can be recorded?
Well, they can be, but listen, I quoted for you and your distinguished audience that the minister had 2 years in respect of every year. he has 2 years to request an audit for that year. When did he request the audit for 1999, 2000, 2001? Till sometime late towards 2018, 2019. So Exxon probably believed, particularly given the very incestuous relationship which it had developed with the coalition government, which it bullied into signing this agreement, the Exxon was not entitled to an agreement, period. The law doesn't allow it. So all this talk about sanctity of contract, sanctity of a contract that is illegal, what is so sacred about something that is illegal? You are entitled to a single agreement. You spend time for exploration. If you're finding, you get time for production. But in the meanwhile, you start giving back the blocks to the government. You don't keep it. Exxon was so fortunate, Trotman allowed them to keep the entire 26 million square kilometers, I think it is.
26,000.
26,000 square kilometers. Even though they weren't entitled to it. That's the reality. That's the reality.
In one of our programs, Mr. Frederick mentioned, our previous program, that also the agreement we're referring to called for a budget. Now, Mr. Ram, you know, and I guess this kind of audit, you will need to see a budget as against actual cost. Have you seen a budget presented by Exxon for any of those years we're looking to audit?
Well, it certainly wasn't made public, but the fact that something isn't made public doesn't mean it doesn't exist. If the minister for whichever government was doing their work, then there are several reports that have to be prepared and submitted, including a work plan. Because look, this land belongs, or well, it's water day in that case. It is part of the sovereign territory of Guyana. You occupy it based on my permission. So if you're not using, you have to give it up. I believe the budget was done. In other words, for every year, you had to do a work plan and a budget. Because the minister could come and say at some point, say, look, you know, you ain't using this land. So even though you had the agreement in the first place for 4 years, first year you do nothing. Second year you do nothing. He said, look, if you don't pull yourself up, I am taking back the license, the exploration license. He has the power to do that. Similarly, with a production license, you can find oil, and then you ask for a license, you get a license, and then you can't build the FPSOs and all the infrastructure for the production of oil. He said, well, sorry lads, I'm taking it back. I'm giving you so much time to put your house in order, and if you don't put your house in order, I'll take it back.
So in your view, there is a budget, but I just Markle, based on the audit they did, shouldn't they have a budgeted cost and then the actual cost and then do a variance analysis and of course then do the audit as well? Shouldn't that all that be in the report?
Well, I think that is what. Look, everybody approaches an audit differently. given my legal background and understanding of the agreement, I might have taken things differently. I can't say I particularly am impressed with IHS overall report. I would have certainly liked them to say that the agreement, that the audit, that the financial arrangements by the oil companies, by the contractor, are consistent with the requirements of the agreement. You don't see that. They describe this as a cost recovery audit.
Yeah.
That's all they said. Now, one important thing that they certainly when it comes to the question of production and even this, they use, if you look at the royalty provision in the agreement, it talks about net of any petroleum use in the operations. Now it clearly can't be petroleum that they generated from the fields, because that's not refined. It means that they would have bought. I am sorry, I don't see that in the report. I would have liked to know how much of that. I would have liked to know. There are 4 types of costs, Mr. Sugrim. There are costs, and this again is set out in the agreement. There are costs, and they have recognized this as well. There are costs that are recoverable without question. There are costs that are not recoverable without question. There are costs that are subject to recovery based on the approval of the minister. And then there's another one that is subject to the approval of the minister. It's a little bit of 6 of one and half a dozen of the other. I would have liked to know how much cost did the minister approve that is other than that basic, you don't need approval. I understand the head office, which is not a recoverable cost under the agreement. I understand that there is that head office has been the expenditure is probably a recoverable cost because they justify it as well, it helped them to save rent. No, the whole idea, you want them to pay rent. That's what local content is about. They're not coming and replace. They're not suddenly landlords. But I want to quote something. I don't know if I can find it. Anyway, what they did, they said they were advised by the GGMC. I don't know how the GGMC get involved in that one. That there was no cost subject to approval of minister, no cost in the other language.
Mr. Ram, we are running out of time now, and I know we had a really great discussion, but I want to ask you this question. How much was the IHS audit? What was the figure they were looking at initially?
Well, remember the cost recovery up to December 31, 2015
plus June 26, 2016
was 460 million. I have those numbers, but it's not as huge a figure.
So that 400 odd million, are they disputing 214 million? Is that correct?
I think if you take up to 2017, you'll have to look to see what the total cost to 2017 was. So is it 460? I believe it's another 300 million or something like that.
Okay, so let's do for Guyanese.
That's
we are wrap-
plenty. That's
we are
plenty.
wrap- yeah, we are
I know
wrapping
you-
up now, but we have a cost of about 700 million, let's say, and we are finding problem with 214 million. So, Mr. Ram, is this the tip of the iceberg? What happened when we do the big audits that is billions of dollars?
Well, I think what's going to happen, I don't see, as we said, Bobby Gosai is the only one who appears to have faced any sanctions, and we don't know what those sanctions are. Exxon has got away scot-free, even though it's cheated in its books. And that's fraudulent. Under the US law, that would be fraudulent. So I think up to 2022, we're going to have some problems. So that you have the other years to deal with, right up to production, and then we don't know what's going to happen next. I suspect Exxon will be more careful about what it puts in the books and what it claims as recoverable expenses. It ought to have done so. The agreement, for example, requires it periodically to state give a production statement of expenditure and receipts, end of year statement, cost recovery statement. All of those things are provided for in the agreement.
Yeah, but Mr. Ram, if they submit that to the government of Guyana, do we have the analysts to go through those things and to dissect what is supposed to be there or not? Or are we just taking numbers, just put it on a shelf somewhere?
Well, you know, we have a whole ministry that is dealing with petroleum. We have access to experts. You don't have to be employed. So you can ask these things. And if people see, if the oil companies see, you know what, we can be embarrassed by some of these questions, they're going to be a bit more careful. But if we treat them as friends and, you know, just socialize with them for certain terms and all of those things, not that you want an adversarial relationship, but look, my task here is to see your duty is to utilize the resources in a world-class, best of practice way. You have to come to me, and I am going to make sure. I am going to make sure that every statement they have to do about 9 statements. Some of them monthly, some of them annually, and I think one of them quarterly. But nobody has taken these things seriously. We should not be auditing 2005 in 2017 and issuing the report 2017, 2018, issuing the report in 2021. No, that's not good enough. Just like how accounting must be timely, so must audit be timely.
Well said, Mr. Ram. To our viewers out there, you are listening to OGGN, All Talk with OGGN, Guyana. And today we were discussing the Exxon 2014 audit, fiasco or debacle, whatever you call it. We don't know what the final result will be. As we all know, Mr. Ram just mentioned it, that one gentleman from the ministry was used as a scapegoat, but I think many Guyanese believe it went higher up. And we'll have to wait and see on the final determination. Guyana would have received an additional $107 million in revenue had this audit been finalized and this 214 million costs was put aside and not acceptable as costs recoverable. So, yes, Mr. Ram, you want to say something?
I just want to make a quick point. I know you're wrapping up. Vice President Barjagdeo has said he is ignoring all that was done by Mr. Gosai, and the $214 million remains the figure.
Well, that's a good statement from the Vice President. So the Guyanese out there, to you on radio, Kaitio Radio, 99.1, 99.5 FM. For you on YouTube and on Facebook, we want to thank you again. If you like our program, give us a thumbs up. If you have a question, post it on the, or yeah, if you don't like it also, you can give a thumbs down. But leave a question anyway. Leave us a comment. Let us know what you're thinking, because our job here at OGGN really is to disseminate information to our people. And we want to thank so much Mr. Christopher Ram, Chartered Accountant Attorney at Law, for being on the program today. Mr. Ram, thank you so much for taking time off. I know you're a very, very busy man. So we want to thank you so much for being on the program tonight. And we look forward to seeing you again. I have many, many more questions for you, but I couldn't ask them because time has run out on us. So I look forward to meeting you again on this program in the not too distant future. Again, thank you so much. Anything in closing?
No, it's been my pleasure. And I do have a column. As persons know, I write a column in the Starbuck News. I'm actually resuming the column in this Friday's Starbuck News. And it is intended to share information and to help, because the column took a byline from 1926 or 29, I believe. Every man, woman, and child needs to become oil-minded. Now we are totally a petroleum country, and we all have a duty to pay attention to what is happening in the sector and to speak out.
And that's an excellent point. No matter who you support the PVP, that's fine. You support the PNC, that's also fine. But as Mr. Ram said, be educated. Speak up when things are not going right, regardless who you support. That is your democratic right, your fundamental right. But speak up. And we want to thank you again, Mr. Ram, for being such a great voice. And again, for those of you reading the Starbuck News, I know many of you are, please read Mr. Ram article. Some really outstanding articles, and you will learn a lot from the oil and gas sector. As I said, and I know you want me to repeat it, he has a master's degree in oil and gas with distinction. So when he writes, he knows what he's talking about, compared to us, to others who think they know, but they don't know one crap. Again, we want to thank you so much, Mr. Ram. And until the next time, God bless our great country of Guyana. This is Charles Sugden signing off with All Talk with OGGN Guyana. Thank you.